So, what if I told you there's a 5-step blueprint that could literally change everything about your financial future? We're about to break down 5 super powerful strategies designed to take you from that feeling of constant financial stress to actually building real, lasting wealth. Just take a look at this number, 78%. It's staggering, right? That's how many Americans are living paycheck to paycheck right now. It's a sign of just how much financial stress is out there, and hey, maybe it sounds a little familiar. But here is the really good news. While this is a super common struggle, it absolutely does not have to be your story. It's not permanent. There is a clear path out of this cycle. And that is exactly what we're going to do today. We're handing you a clear 5-step blueprint to start moving from financial worry to real financial freedom. Okay, let's get into it. All right, our first strategy is all about taking back control. I mean, before you can build anything, you need a solid foundation, right? Well, the 50-30-20 rule is that foundation. It's a simple but really powerful way to tell your money where to go instead of just wondering where it all went. So how does it work? It's pretty simple. 50% of your take-home pay covers your absolute needs. We're talking housing, utilities, groceries, the essentials. Then 30% goes to your wants. And you know what? This part is important too. This is your fun money for things like going out to eat or hobbies. And finally, the last 20%, this is where the magic happens. This is dedicated to your savings and to paying down any extra debt. Let's make this real. Imagine you take home $4,000 a month. Your plan would look just like this. $2,000 for your needs, $1,200 for wants, and a really powerful $800 that starts building your future. Okay, so you've got that 20% chunk set aside for savings. So what's the very first thing you do with it? Before you even think about investing a dime, you have to build a financial fortress. This is your safety net. Yup, we're talking about an emergency fund. And listen, this isn't an investment. It's insurance against life's curveballs. A sudden job loss, an unexpected medical bill. This fund is the barrier that keeps a bad day from turning into a decade of high-interest debt. The goal? 3 to 6 months of your essential living expenses. So where do you actually keep this cash? Let's look at the options. A traditional bank, they might give you a tiny fraction of a percent in interest. But a high-yield savings account, that could be earning you 4% or more. Your money stays safe, it's accessible, but it's also actively working for you instead of just sitting there doing nothing. I mean, it's kind of a no-brainer, right? Once that safety net is built and secure, it is time to go on the offensive. This next step is the primary engine for building some serious wealth: retirement accounts. Okay, what's really fascinating here is the whole concept of free money. If your employer offers to match your 401k contributions, let's say up to 5% of your salary, and you're only putting in 3%, you are literally turning down a 2% raise. It's an instant 100% return on your money. You are not going to find a deal like that anywhere else on the planet. Now, after you've gotten that 401k match, you've got IRAs. The big choice between a Roth and a traditional IRA really just boils down to one simple question. Do you want to pay taxes now, or do you want to pay them later? With a Roth, you pay your taxes today, and then your money grows and comes out completely tax-free in retirement. With a traditional IRA, you get a nice tax break today, but you'll pay taxes on it when you withdraw. And this is why starting now is so critical. Just look at the insane power of compound interest here. Starting at 25 instead of waiting till you're 35, well, that could be the difference between retiring with $1.7 million and just $750,000. That single decade is worth $1 million. Time is your most valuable asset, period. All right, our fourth strategy is about mastering a number that here in America is basically your financial DNA, your credit score. It impacts your financial life in ways you probably don't even realize. Your FICO score, which ranges from 300 to 850, is kind of like your financial report card. It tells lenders how trustworthy you are with money, and it directly controls the interest rates you'll pay on, well, everything from a car loan to a mortgage. So how do you build a great score? It's actually surprisingly straightforward. First, pay every single bill on time, every time. This is the biggest factor. Second, keep your credit utilization low. So if you have a credit card with a $10,000 limit, try to keep your balance below $3,000. It just shows you're responsible. Third, don't close your old accounts. And fourth, have a healthy mix of credit types. So why does this matter so much? Get this. Over the life of a 30-year mortgage, a poor credit score could cost you well over $100,000 in extra interest. Mastering your credit isn't just about getting approved for loans, it's about saving an absolute fortune. So, after saving a fortune on loans, let's talk about saving a fortune on taxes. Our fifth and final strategy is really the capstone of this whole thing, because it's not just about how much you make, it's about how much you get to keep. I want you to meet the Health Savings Account, or HSA. This thing is one of the most powerful savings tools out there because of its incredible triple tax advantage. The money you put in is tax deductible, it grows completely tax-free, and then when you pull it out for medical expenses, it is also tax-free. You just can't beat that. And beyond the HSA, there are other smart tools you can use to keep more of your money. A 529 plan is fantastic for education savings, tax-free growth, and withdrawals. And even a regular brokerage account has tax advantages for long-term investments, since they're taxed at a much lower rate than your regular income. So let's bring this all together. Building wealth is not about getting rich quick or winning the lottery. It's about building a system of smart, consistent habits. It's about making a series of good decisions, one after the other, starting right now. So let's just do a quick recap of your 5-step blueprint. 1. Get control with a budget. 2. Protect yourself with that emergency fund. 3. Build your future with retirement accounts. 4. Lower your costs by mastering your credit score. And 5. Keep more of your money by using those tax-advantaged accounts. You can think of all this like building a house. Each of these strategies is a brick in the foundation of your financial freedom. You don't have to do it all at once, not at all. You just have to lay the first one. So, the only question left is, what's the first brick you're gonna lay?